Good morning, everyone. Hope you're all doing well as we head into mid-March. Want to provide a little video update, a little video note here on some things we've been working on, as well as some questions I have, and I think you might too. We're going to work off of the theme of it's always something, and I think that ties well to the three topics of discussion. Number one, markets; two, tax planning; and number three, financial planning opportunities as we move forward into the rest of the year here. And speaking of it's always something, daylight savings time, great in the evenings, not so great in the mornings. You're trying to get kids out the door to school. Anyway, let's get into it. All right, the markets, the poster child for it's always something. We look back over time, there's always a reason to sell. There's always a reason not to invest. This year has been no different, right? And the main drivers of that conversation have been interest rates, inflation, and now war in Eastern Europe. So let's take a look at it a little bit closer. Inflation has been a problem since the pandemic, and it's been exacerbated now by kind of what's developing overseas. It's a problem. I mean, we have the highest reading of inflation since 1982 coming in at 7.9% on the CPI index. It's a big number, and I think it could move higher. You know, we could see 8 or 9% before the whole thing shakes out. Energy prices, food, metal prices are all moving up with what's happening in Eastern Europe. As you know, some of those goods that come out of that region are being, the supply just isn't there. So what does that mean for the markets? Well, the good news is the Fed's trying to fight inflation with its interest rate policy. They announced a 25 basis point hike yesterday and up to 6 more hikes in the course of this year, which is an upside surprise, a hawkish surprise. The market was expecting 4 to 5. So they're really going out trying to fight inflation. It was actually well received, which is surprising because all along the market has wanted the free money, the easy money to remain in the system so that we can see higher levels of growth. But I think this is necessary. Right? We also might see increased talk of a recession, which could happen later this year. Might not be a bad thing. It's likely to be short-lived and shallow based on the fact that consumers are in a stronger position than they've been, and we just need some of this inflation to work its way out of the system. In the past, that's only happened with a recession. You look at the major spikes over the last, going back to 1940, the only way out of it really has been a recession, and sometimes it's been rather shallow, so it might not be a bad thing. Keep in mind, the market's a leading indicator, so even if we do go into that recession, the market probably will bounce long before it ever even shows up on paper. So what does that mean for stocks? Right now, I think we have opportunities to rebalance, opportunities to reposition, take advantage of some tax loss harvesting, and just try to find good companies to buy and reposition ourselves as we move forward. I don't think there's a reason to panic at this point, and I think it's just we're well within. If you look at the charts on intra-year declines, we're well within the range there. I think this is just kind of part of the normal market cycle. We'll see as things develop, keeping a close eye on it. Of course, I have to say, remember, let's take the long view. And more importantly, every trend has its countervailing force, so just keep that in mind as we move forward. Moving on to tax season. We're in the midst of it. Tax deadline this year for filing is April 18th, giving us time to make those traditional and Roth IRA contributions. You can put up to $6,000 under 50, up to $7,000 if you're over 50 for 2021. You can also make SEP IRA contributions up until that deadline, and that number is $58,000 for 2021, or 25% of your gross income, whichever is less. What's changed for 2022? Well, tax brackets have been indexed for inflation a little bit. Retirement plan contribution limits have gone up slightly. 401k limits have bumped up, as well as the SEP limits. So just need to adjust the plan accordingly to take advantage of that. Outside of that, it's really just a matter of being proactive throughout the course of the year and looking for increased deductions, looking at charitable giving strategies, all those sort of things that need to take place before year end. So that we can really maximize and make the most out of your tax savings. Moving on to financial planning opportunities. This is a great time of year, like I just mentioned, reviewing tax returns. That's a big financial planning opportunity. But also, I might sound like a broken record on this, but cash flow planning, it's the most important part of your financial plan. So we need to look for opportunities there. Has your income increased? Are you directing funds to the right places? Let's take a look at it and really see. It's challenging no matter what income level you're at, what asset level you're at. Cash flow planning is tough, and it gets compounded by irregular income, if you receive bonuses throughout the year, whatever it may be. So let's make some sense of it and get that plan updated. Outside of that, rebalancing, like I mentioned during the market update, is a big thing that we're going to be looking at going forward, trying to position, as well as some tax loss harvesting. Earth Day's coming up in April, so if you're into sustainable investing, and looking for a greener or a cleaner footprint, that's something that we can start looking at as well as collaboration, right? So remember, being intentional is a big part of financial planning. So it's all about who you collaborate with. I'm happy to be there as a sounding board and make any connections that I can. So keep that in mind. Also, let's look at any mistakes that we made over the last year and learn from them. Mistakes are great learning tools, especially in financial planning, as long as they haven't been catastrophic or anything like that. So those are all things that we can look at. If you want to update your plan, let's get on the client portal, get that updated as well. So bit of a brief update, but I hope you find this useful and hope everyone continues to do well. Have a great week, guys.